You were listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 20th of November, the very short Thanksgiving trading week. Markets are open Monday, Tuesday, and Wednesday, closed Thursday, and then a shortened trading day on Friday. Now, I want to give you a special notice. Those of you who are fans like I am, and I push the book all the time, that is the Stock Traders Almanac. It's put out every year. You need to go ahead and order next year's edition, the 2018, by Jeff and Yale Hirsch. Well, they have something for you to pay a lot of attention to this week. It's on page 104, and it deals with trading through the Thanksgiving market, long into weakness prior, exit into strength after. I want you to go read page 104. Having that knowledge alone is many times worth the price of this valuable book. So please, that's about the only book I buy every single year. Stock Traders Almanac. Great, great book. Very helpful. Basically what it does is it looks at all the historical things in the market that over and over again repeat themselves. And these guys are just amazing. Yale started it. Jeff has taken it over, has his own website, of course, and sells, I'm sure, hundreds of thousands of copies of this most valuable book each and every year. So go ahead and put that on your Christmas shopping list. Put it in your own stocking. Now, I know we've got less than 10 minutes. Let's jump in to what we have going on. What do we see happening at the end of the week? Well, as we look as to what happened over the course of this past week, it is the first down week on the S&P 500 in like 11 weeks. We have a red spinning top, which means what? Indecision. Now, this is the second full week of down movement on the derivative oscillator. And in the prior week, ending the 10th of November, we saw all of a sudden the price percent oscillator went sideways, and now we see it actually moving down toward the end of this week. So again, weakness, definite weakness showing in the market. But if we go all the way back to the 11th of August, we had 3 weeks where it was down before this 11-weeker took off. So again, just watch, see what's happening in the marketplace. We actually went red for several weeks on the derivative oscillator, and we had the price percent oscillator rotate over for many weeks. So again, keep your eye on the prize. And again, we've had an incredible run up since we had our weekly vertical crossover going up back on the 29th of September. Now, don't want to run out of time. As we look closer, what do we see on the latest 2-day chart that ended on Friday? Bit of a green up movement for the day. The S&P 500 down 0.29%, paired off some of that up movement on the prior day. But of course, we'll just continue to watch. Big down candle, of course, on that 2-day candle ending on the 15th. So again, price percent oscillator in the negative, derivative oscillator gaining downward momentum. What do we see going on the 4-hour chart? Paired off some of that up movement, derivative oscillator still losing downward momentum, and we basically have seen a sideways slide on Friday, tending down, again down 0.29%. So we don't have a trade at this point. We have the price percent oscillator still weak on the 4-hour chart, but of course the big chart, the weekly, it is weakening. So we'll continue to watch. Of course, our weekly is up, our 2-day is down. So we shall see what we shall see as we continue to plug along. What do we see on the Qs, QQQ? Well, we see the the weekly chart is up, having crossed over back on the 27th of October. The 2-day chart, as we look a little closer, and again, continuing to build. The week ended up, not as strong up as the prior weeks. We see the 2-day chart ended flat, did go up over the last 2 days, had sort of topped off somewhere in the neighborhood of about 154.52 and actually blew through that on the last 2-day candle. So that's looking pretty decent as far as where the Qs are. Price percent oscillator, like we said, has weakened. Derivative oscillator losing energy. But again, Both the weekly and the 2-day are in up moves. Now, what did we tell you to look for? Is there going to be a crossing over going up on the 4-hour? Did not happen. Lots of up movement the prior day on the 16th, but on Friday, just sort of went down and sideways, actually down 0.38%. So see how we go into Thanksgiving week. If there is a strong surge in up movement, you see a crossover, you have a potential jumping in point since the 2-day and the weekly are up. So we'll keep a lookout on that, keep you posted as we move forward. What do we see going on the TLT 20-year Treasury bond fund? Well, we see 3 weeks of up movement, still negative on the derivative oscillator and the price percent oscillator. We'll see if indeed there is a crossover. There's continued weakness in stock. You would think, how bonds are typically a safe haven, that bonds would go up. Haven't seen the fruition of that yet with a crossover, a weekly vertical crossover. That's our real key, that the mood has changed, but it hasn't happened yet. Still confirmed down move on the weekly. We do have a switch over that took place on the 2-day chart all the way back on the 3rd of November. Went up for about 4 days, and then, well, 6 days, and then started weakening, and a really heavy down day on the 13th, and then turned around back up again on the 2-day candle on the 15th, and then the 17th bonds up 0.74%. But again, that weekly down keeps us from getting into any trade just yet. What do we see on the 4-hour? Really a sideways slide, tending up, did move up higher than where it closed back on the 4-hour chart in the afternoon on the 15th. Actually, when I say it closed higher, it didn't go higher. Highest point yet in the last few days has been the afternoon of Wednesday, the 15th, where it reached a high of 126.66, closed at about 126.30. So again, we'll continue to watch, and if we get the 2-day and the weekly going in the same direction at some point, that's when we'll jump in. Remember, we don't have to trade. First rule, don't lose money. Second rule, make money. How do we make money? Following trends. When we don't have clear trends, we don't follow them. That's called gambling, and the house always wins. And my friends, you are not the house. Let's go back to our weekly chart, look at our last chart for the week as we get ready to go into this next shortened week. What do we see on gold? Gold up big for the day, 1.19%. Now gold still in a confirmed down move on the weekly, although it has kinked up on the price percent oscillator, derivative oscillator losing downward momentum. And what do we see on the 2-day chart? It, of course, did cross over on this last 2-day candle going up. So we can go ahead and we can move the 2-day chart in a confirmed up move. And again, we'll have to wait and see just what happens with that weekly. And the beautiful thing about how easy it is to use free stock charts, you can rotate things around so quickly, keep up with your charts, and do your maintenance so quickly and easily. It's just all right there at your fingertips. What do we see going on the 4-hour? Well, we can see the huge spike up. Remember how I told you we had to wait and see? We had this sideways slide. We were talking about that yesterday. And if we did see a kink up, what would happen? Blast one way or the other? Well, it blasted up. Did any of you jump in the afternoon after that crossover on the 4-hour chart? Now remember, gold is different. This 4-hour chart is the magic chart. When it's clearly moving, as it does most often, you have nice, beautiful jumping in points. After the noon jumping in point would have been at the opening at 121.88. Gold went as high as 123.17, closed at 122.74. So again, just keep an eye on this 4-hour chart whenever you are tracking gold. And again, the jumping in point, when you're doing just the 4-hour chart, after the prior candle closes and the morning candle closed at noon, and then the opening at 2 o'clock around 121.88 would have been your opening point. So that's where we are. No requirement to trade that at all. You can trade the typical way that we trade. You can wait for it and trade it in the right direction when things are ready. You sure don't have to go out on a limb, and you never do anything that you are not 100% comfortable with. That's not what we're about here at Charting Wealth. As I finish off my last trend line for the week, folks, that's where we are as we end the week and go into the next week. I sure hope that you are looking forward to a big, wonderful Thanksgiving. We thank you so much for being with us. You are the whole reason we do this. God bless, my friends. All the best from the entire team here at Charting Wealth World Headquarters.